G'day everyone, Leigh here from Martinuzzi Property Group with my weekly real estate market update. Making headlines this week, Sydney's prices have now fallen into double-digit territory. So property prices have declined in Sydney since its peak back in February 2022 by 10.1%. Now, I've got a really interesting chart this week that shows how much further prices would have to decline to reach pre-COVID levels. So that's shows you the charts across Australia as well. So check that out at my blog at martinuzzi.com. So in Sydney, for example, you would have to see prices decline a further 11% approximately to reach pre-COVID levels. In Brisbane, now Brisbane has recorded a decline since its peak by about 6%. Now, Brisbane peaked back in June. So you notice there that the peak from Sydney and the peak to Brisbane was about 4 months behind. So I expect that we're lagging Sydney's trends by about 4 months. Now, Sydney has started to see an ease in the rate of decline. So last 4 weeks was less severe than the previous 4 weeks before that. So they have started to see things level out a bit more now. So it's unlikely, possible, but probably unlikely that they're going to see prices dip back to pre-COVID levels. In Brisbane, whilst they've seen a 6% decline since its peak, they're still well above pre-COVID levels, and we'd have to see another 27% drop in property prices in Brisbane to reach pre-COVID levels. And I expect it to be somewhat similar here on the Sunshine Coast. I don't actually think our prices have fallen quite that level, 6%, maybe locally here around 3, 4, 5% potentially. So we've got a long way to drop further if we were going to fall back to pre-COVID levels. However, I don't think that's very likely. I think property owners will choose to rather hold on to their properties and ride out this part of the market cycle rather than selling for a price that they wouldn't desire. So I think that's what's going to happen. Unless people go into mortgage stress, I don't think we're going to see too many bargains happening over the next 6 to 12 months. That's at least my take on it anyway. Looking at borrowing capacities, again, I wrote a little bit of an article on this as well. So current variable interest rates are averaging anywhere between 4 and 5% from what I've seen. So let's say about 4.5%. Now, banks will assess your borrowing capacity on a higher rate. So the bench is 3% higher than that. So you're looking at anywhere between 7 to 8% assessment for your borrowing capacity. So looking at a $500,000 loan, for example, you're looking at actual repayments of around $30,000, but you will be assessed on your ability to repay $40,000 per annum in loan repayments. So that's just to give you a nice buffer for further interest rates rises going forward. Now, it is likely the economies around the world are really struggling with inflation, which was largely caused by how we reacted to the COVID pandemic. Inflation has gone through the roof, and all the governments are trying to bring that back into line. In Australia, the RBA is trying to control that by increasing that cash rate and to discourage people from spending money, but there's still a lot of people out there spending money naturally. So that's really their battle at the moment. So it's likely that interest rates will continue to decline, albeit at a slower pace than we've experienced so far this year. But that will affect our markets moving forward into 2023. Now, I've got a nice chart here from Matusik, who provides a property clock to where the markets around Australia sit as far as the growth stage and stagnation stages. So right now, Sunny Coast is in the declining market, naturally. So you can check that out as well. Really interesting chart there. It shows that, sales are definitely down, and locally here in the Palmwoods Woombye area and the surrounding suburbs, we've seen a lot less sales happening than we're used to. There's also a lot more properties coming to the market, and because properties are sitting on the market for a bit longer, it makes those numbers look very much inflated. The good news is there are still plenty of active buyers out there looking for the right home. Yes, naturally, you're going to find bargain hunters in this sort of a market, but that's not who we're dealing with at the moment. And certainly I haven't seen any bargains happening from our end anyway. There are a lot of active buyers. We had 2 properties recently come to the market, open last weekend, and 4 written offers for those 2 properties separately as well. So there are still active buyers out there. Yes, they may not have the urgency from what they had last year, and maybe a bit more conservative with their offers, but that's just to protect themselves against, costs of living and the future rising interest rates. So whilst the economy seems a bit shaky at the moment, look, it's still positive. I would suggest if you're looking to sell, probably this side of Christmas would be preferable, because it's very uncertain what's going to happen into early 2023. It could be that we start lifting again with prices, or it could be that the interest rates go up further and the buyer demand drops even further as well. So that's my weekly wrap, guys. Anything we can help you with, sales, rentals, advice, give us a call. We'd love to help. MPG with you all the way. Talk soon.